Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the Trader Lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. Thanks on the sound check. Appreciate it. Thanks, Barty. How we doing in YouTube? Screen and audio percolating today. Okay, thanks, Stephen. Appreciate it. And everyone in the Trader Lab, thank you for your participation and make this one of the top trading communities potentially available. And everyone should know I'm not a vendor. There's no specific trading course. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. The thing about trading is it is an isolated business. You really can't talk about it to anyone who hasn't been there and done that. And our senior trader has over 50 years. I have approximately 45 years. I have to go look at the quote anniversary date, but 45 years of trading both as a professional and, of course, now out here with you. And together, all of us can leverage our experience to create something better. One thing about this business, you're never done. You're never going to stop trying to get better. There's always something you can improve. And the Trader Lab is all about getting better. And if you don't have an edge, if you don't understand what edge is, if you don't understand what trade plans are, or how to manage the psychological and emotional impediments of trading, then the Trader Lab might be for you. And of course, there is no cost. Now, grab a pen and paper. I've got a lot to go over with you today and some very key components so you can better understand how the market works, why it does what it does, and how you might get in alignment. In addition, the stream's about integrating order flow tools with the auction, in other words, market mechanics, and why the market at times has certain behaviors that we can quantify and potentially create statistics. So instead of, quote, gambling, we can operate more like a gaming theory, in other words, a casino does, only playing games, if you want to compare it, that have a statistical edge, only interacting and playing that with anchored inputs, not random inputs. The market is random and uncertain. Something needs to be anchored. Casinos only play games with an edge. They do not make them up. They do not change them. They don't skip hands when a gambler walks out with cash. That is our business. Now, you may believe it's something else. That's okay. But if you approach it with a proven business model, it might give you a better opportunity for sustainability and potentially building a career in this business. And this is what the Trader Lab is. And of course, past performance is never indicative of future results. Your mileage may vary. You got to do the work. And that's what the Trader Lab community is about, a support and accountability process and the leveraging of our experience, metrics, structured trades. All of this is available, plus a library of webinars. Let's get to it and grab the pen and paper. This way you can get the most out of what I'm going to share. What I'm going to share today is advanced and multidimensional, or multiple time frame. And we're going to go into it as much as I can. Also, I want to remind everybody, I made yesterday's stream public. It is about a specific condition called Vpac migration and trading in fractals. It has advanced concepts. Now, I'm not suggesting that you start with an advanced concept. I am suggesting that you observe what you see, if you will, and think about what is happening and is it different than what you're doing? And might an understanding of how the market works maybe help you in your development? That's the question. The answer is up to you. And welcome again to Trader Lab. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Now get that pen and paper out. Let's go. Now, I'm going to show you some stuff, and it's going to require me to kind of jump around a little bit in Bookmap. Bookmap is a high-tier order flow tool. First thing I want to show you This is a Investor RT. It is my higher level, if you will, software. And what you're looking at here is a volume profile. Now, auction market theory is based on volume. And the idea of volume, just to show you what you're looking at right here, is shopping. So if you're in the store and the retail price is here, it's high volume. Everybody pays it. If the price gets too high, you'll notice how it tapers off. Well, there's less buyers until we reach exhaustion. Then down here, just as an example, I'm just giving you an example, this low volume area is where the price was on sale. And you'll see the volume dried up here too. Why? The price got too low. So then the price will rotate back up. This is what a consolidation looks like in volume. I just want to point it out to you. Now let's go a little further. This was our gap day before yesterday, and it was a trend day up. Happy days are here again. Now, yesterday we opened. Now, yesterday, if you remember in the stream, and that is available, it's out there in the space for you guys. I was looking at longs because of statistics and the potential to test here. Well, that didn't happen. Instead, it was get short, put your helmet on. So what happened? A couple of things. One, the market goes up to go down, and then the market goes down to go up. All right. So today, I was anticipating open, and you'll see how this all manifests itself. Go down, test yesterday's low, trap shorts down here at this level. This is called the low volume node. Now, this is an intermediate time frame profile. Now, so what that is, let's take this concept that I was showing you up here. This is the outside edge. I'm not paying that. Now, what happened yesterday is we fell underneath this low. So now that creates a low volume node. This now is the retail price. Now, this is today, so let's ignore this for the moment. This is the highest volume. Now, the market operates in fractals, and this is about multiple time frames. So this was the retail price in this fractal, and then the market participants said, I'm not paying that, and they left the store. Think of it that way. Then we do it again over here. I'm not paying that. Retail. Oh, it's on sale. Rotation. And this is what happens in this thing. We break under here. Yesterday. What does it do? Too low, too high. And then for this whole area, and because they overlap, I put them all together. And you really just put things together to see what you want. This is the highest price, retail price in this whole thing. So I'm going up in time frame. Now, this is important. So basically, 58.60, 58.72.50, 58.84, I think it is. A little hard for me to see it. This is a naked volume point of control. It's the highest volume in this day coming down. Then we have this outside edge, and if we fall out of this low, the potential is to come to 58.32, not a recommendation. So call this our sandbox, and it's in multiple time frames. I hope you wrote these down. You're going to see why it's important and how, if you think in multiple time frames, which we have to, how you might use it. Now, there's one other piece. This is Bookmap, of course, and this is December ES, but it has a filter on it, and it's called Trader Map Lite. And what it does, it takes the algos and the noise out. And this is the current market. This is the heat map. And this is where you start getting the benefit of order flow. RTH open. Now, this liquidity was sitting here also. And I noted this, and I posted in Trader Lab, which I do when I can, that this is something to observe. It's resting liquidity, and it's in here from early this morning. That's important. So, and I said here, 50, and that does, by the way, the fact I post something, say something or anything is not material. What I do is I try to post information in here that is based on order flow and what might happen. Now, the thing with liquidity, so you guys know, is we don't know, you know, but if the market comes into liquidity, we want to see what happens here. Do we interact? There's 1,200 icebergs going off, buy icebergs at the open. So we know there's buyers here. And then what does the liquidity do? Does it pull or does it stay? That is the key. And this band of liquidity, it stands out. It's pretty darn important. Okay, now let's get into the RTH Open. And if you have questions, post. I'll do my best to get back to them. Also, you're all invited to the Bookmap Discord Trader Lab community. And you can get a lot more and the library of webinars and 60 PDFs of these trade types that I do in the stream. But the point of today's stream is to help you think in multiple time frames, and I don't use the clock, so it's not time for me, it's fractals. And what is a fractal? A Russian doll, you know, Matryoshka dolls. And if, in fact, I suggest everyone in Trader Lab go online and order a Matryoshka doll and put it on your desk, or at least a photo of one, and slam it on your monitor so you do not get myopic. Now, remember what I showed you. That low volume node was up around 70. So you can see how these are on the chart already. The micro composite Vpac is around 61-ish. Here, you see, right over in here. And then we have our other levels. So everything I just showed you on that higher time frame chart is sitting here. Now we have a couple of elements. We are opening RTH Open. Hold on. Is here. So this is the RTH Open. This is the settlement. Yesterday's cash close. Micro composite Vpac around 60-ish. So this is your higher time frame retail price. And don't forget the liquidity is sitting below. It's important. Overnight volume point and control has about an 82-ish% probability. Taking out the ETH higher low has over a 90% probability. These are all statistics. They're available to you guys. Overnight mid about an 82% probability. Also, we have ETH higher lows, I said. So, and this is our retail price. Lovely. So then here's the other thing. Let's consider, and these are things to consider, fun facts to know and tell. The market's short. Remember, market goes up to go down, and market goes down to go up. Market is short. What might we anticipate today? We might anticipate two things. I know it's going to be, it's going to go up or down. And I know now your eyes are rolling back in your head. But what's important about it is, whoever takes the initiative early, especially after selling yesterday, if we get more shorts in the market and they get stuck, now we have today's new sellers and then yesterday's current shorts, which can set up a squeeze. So we know that in Trader Lab coming in, but like everybody else in this business, we don't know what's going to happen. So that can't be solved, because it's always random. What we try to do as traders is detect the behavior of the participants, and then subject to structured, vetted trades that are part of our plan. When the trade shows up, you put your helmet on and you put your risk on, and you're either going to take a stop, which we all do. You're either going to get scaled and then scratch the trade, which means a minimum 2-lot configuration, or you're going to put the trade on, get to your targets, and use a trade management process. I hope that makes sense. Now, RTH Open, and post your questions. How are we doing in YouTube? By the way, if you're visiting in YouTube, remember there's a link in the bottom of YouTube. There's no cost to come to Bookmap Discord Trader Lab community. If you're looking to be in a professional environment, the goal of Trader Lab is to help traders build the business, not gamble. Take risk, yes, but Think like a casino, build a business on a successful business model, which is gaming, and then accept the random outcome. If you have statistics, you now have a way to create tangibility as opposed to emotional stimulus to help you better manage your fight and flight, fear, FOMO, and the rest of it. We are still in a rotational configuration. I'm going to show it to you so you understand why. And it all ties back to that higher time frame chart. And if you're going to review this stream, be sure to make sure you have that high level chart either printed out, screenshotted, so you can get the most out of this. And be sure to review this stream and yesterday's stream on Vpac migration. Advanced concepts. You can learn something different in the Trader Lab, in my opinion. So this is the highest volume. Remember, retail from the shoppers in the ETH. Overnight high is above us, and we have ETH low below us. This is the retail price in the higher time frame. Now, let's go. RTH open, and what do we get here? Well, two-sided trade. So I'm looking at this, of course, and I'm going, well, who is going to take control? And I find, and I always encourage Trader Lab participants to be extremely patient in the open or skip it altogether. Let it get sorted out, because the speed of the open, it's very easy to get picked off if you're too aggressive. And this is why you have to know where your edge shows up. And if you find you trade the open, or better, go on sim, practicing trading these opening trades, and you don't have a positive expectancy, maybe the smart thing to do is keep practicing, but don't trade live. Keep practicing. What I'm sharing with you, I use no indicators. I use order flow and I use structure. This is the chassis, the volume profile. Over here, we have what's called the chart volume profile. This allows me to scroll and see the volume in minutia. Yesterday's stream, I talked about trading in fractals. This is a fractal. Remember, I'm not paying that. Yeah, but it's on sale. Retail is here. Same thing I just showed you in the higher time frame. It's all generic. It's all, as I think of them, fractals, Russian dolls. So market comes down, market comes up. I see my sellers here. I see no buyers here. Let's just look. This suggests the possibility to come down here. Now I'm thinking, now here is support. So I'm a bit conflicted, but because of yesterday's sell-off, remember top of the stream, I'm anticipating, and that's all you got in this business, anticipating short selling. So I'm thinking I want to be short, but I got to be careful because shorts, and I have a high probability here, about 82%. And you have to vet that for yourself, past performance, not indicative results. So I'm going, what's going on here? Support, higher time frame, resistance, ETH. What do we do? Let's look. This is the microstructure. I'm going to put a line in here to help you see this. Now, when you're in Trader Lab, at some point, you will understand what this says. Language of the market. Order flow, real quick. Selling icebergs. Selling icebergs. There's the absorption. Selling icebergs. Buyers push through. Where's my buyers up here? And right here, I'm thinking if it gets here, I'm going to short it, or at least look at it. So this was my target, and this is support. This is like being caught in a vice, right? So when I see this, it sets up the short. Now, let's go back to the order flow. Why did the market not go up here, you ask? Because there's a passive seller here. Now, with order flow, we cannot see the passive side. We can only see the result. So there's the aggressors. That's the green bubbles. Those are stops. 72. This is a stop and iceberg detector. 3. I call this stop divergence. The only thing I use from my days with indicators. Divergence. If the market goes higher and you have less of something, who are the buyers? Buy stops, that's shorts from yesterday, and maybe new buyers. Well, if I see exhaustion in the stops and I see selling icebergs, and I see no buyers above here, I can now start assuming, and it's only a suspect, that the passive or limit order book is absorbing these buyers. And I'm running out of buyers because I don't have stops. Market goes up on initiators and stops, right? Stops become market orders. That's what we see in the delta. So right here, I'm seeing less. I'm seeing no delta. I'm seeing exhaustion. I'm seeing icebergs. I'm helping you put the pieces together with order flow. Now, right here, I don't know. Now, I come here, and right in here, this is support. Right there, the bottom outside edge. I know I'm in minutia, but once you see this, then I'm going to move on. Resistance is here. Support is here. Why do I know there's support here? Because there were sellers there. The buyers absorbed them. Now these buyers are here. That buyer. Now, this is just how I see it. I'm not saying it's right. There was a buyer here. Okay. Sellers were here. Sellers were here. The buyers took over here. Now, if the buyers are in control, is it reasonable, this is order flow, to think maybe if this buyer is going to come here? Oh, really? And now the sellers are here. Now the buyers are here. The sellers come here. The buyers absorb this seller, and we come back and rotate. My sellers are here. Now my sellers are here. My buyers are here. Watch. My sellers are here. It's compressing. Okay? My high volume is right here. I'm in a microstructure, and it's important. Now, so far, I have this down here, too low, and I have this up here. And we're either going to go from here or break down. And that's what I'm waiting for. And I'm as clueless as the rest of you. Don't think I'm not. I break low. Now, buyers are here. Buyers are there. I got my buyer here. Vpac migration. This suggests possibly higher. So I'm watching. Where's my resistance? It's here. Right there, the high volume node. This is shopping. Oh, I'm not paying that. Yeah, but it's on sale. And then this. Retail. So maybe too low, too high. Support, resistance. Down here, support. These guys were absorbed. Those guys were absorbed. This is right before the RTH opened. Buyers were here. We tested those buyers. Micro high volume. I'm just going to put another little line on here just so you see where all this is coming from. The sellers were absorbed. The buyers took over. The sellers tested those buyers, and we came up here. Up here, we're going to the moon, except now the sellers are here. The high volume is here. The micro high volume is there. So let's watch it. Come down here. I'm testing these buyers, looking maybe north. Got to clear this. Okay, now watch. Break low. Break below. Pull back. Too high. Vpac is here. This is the daily developing time frame highest volume. This white line is only the volume in this structure. This white line is only the volume in the structure. Support, resistance, and then in the multiple time frame, support, shift, support, resistance, break low, resistance, because now I'm below it. Now I'm below it. Now I'm below it. This is a short. Now, watch. This is Trader Lab structured trade. Now, I took it here. You can also take it there. You can also take it here. And as you're waiting on it, you're getting more risk. So I'm a little risk adverse. If I get short here or here or here, my stop's here. Why? Too high. This is how you use the auction. Now, let's watch. Now, the target on this is the ETH low. And remember what else I mentioned to you. 53 at the top of the stream that we had resting liquidity. You can't see it here because this algo. You'd be using the trader map white, but I already showed it to you. That's why I do this. Now, This is my target, and my liquidity is sitting here in the heat map. You won't see it here because the noise from this algo. So I have another screen open with the filtered heat map so I can see the resting liquidity. Let's watch. I'm going to label this. This is called Vpac migration. I made these terms up when I started doing this. Nobody was thinking like this. I used to wonder about it myself. And I got a lot of pushback in the early years from traditional market profile because I started out with market profile also in the mid 80s and actually learned it from the guy who created it, Peter Stottlemyre. And you know, and like a lot of things, you learn something and it's almost like dogma. Well, this is trading. And what everybody does, for me at least, is not what I want to do. Because I've already done what everybody else does. And I got the same results they got. So I was always thinking about, well, what else? And I saw this behavior. And I was thinking, what does it mean? What does it mean? Well, I started using it in a different way. I started interpreting the way the market operates in a different way. I started thinking of it as Russian dolls or fractals inside of each other with their own individual structure and auction. I started thinking differently. And it's, you know, and I started doing that because I was doing stuff that I thought was right, and it always broke down. And I was going back and trying to fix it, to quote, make it better. I believed I was doing the right thing. I just couldn't understand why it wasn't sustainable in spite of winning trades. Vpac migration, Vpac migration, target. And don't forget, you can't see it, liquidity. So the target's right here ahead of this thing. Let's watch it. Vpac migration. What does it say? Let's speak language together. Too high, too high. So resistance. This is potential resistance, resistance, potential resistance. Target is here. Now, where do we come? This is resistance, mid and VWAP. This is a continuation short if it's in your plan. Where do we go? Target is here. Okay? So for me, you know the short, that was my short. Now I'm thinking at the time, yesterday, now I know the liquidity is here. And I posted that in Trader Lab this morning. You know, keep an eye on this thing. Now the thing, and it's not here. It's what I showed you early on. The thing with the liquidity is we don't know what the intention is. That's what it's like stepping on a banana peel. You don't know. Are you going to fall or are they going to pull? What's going to happen? They did not pull. They stayed in the order book. My trade was to get here and then fall out the bottom and come here. Microcomposite low volume node. Remember the bigger chart I showed you. To come out, to take stops, get additional sellers, and get them trapped in this area and then squeeze them out. That was my trade plan for today. I post that in Trader Lab. And not that it matters because it's only a plan. So part of having a plan is anticipating. And the other part of a plan is when it doesn't do something, then what? Because you got to always know not what will happen because we can't. We have to know what our plan is with conditional statements. So if this, then that. Then that. If not, then what? That's the opposite. So it's branch logic with conditional statements. That's what I do. And that's what I share in Trader Lab. It's a way to keep your brain not to get myopic. So there's a lot of pieces to trading, and you can make it as simple or complex as you want. I believe to make it as simple as possible. And I believe also, and it's a personal belief, it might not apply to you, of course, that anybody can learn how to trade if they do the work. Most are in a hurry, which is really FOMO, and are not willing to do the work. They want the dopamine of pushing the button. And if you don't understand hormones, chemicals in the brain, you are at a disadvantage. You will learn about that if you're going to be in this business, because you're going to have to learn to manage it. So let's look at the structure. Again, target, and then this and this, okay? So that's my short. Now here, right here, and again, I'm only doing this in hindsight because I don't know. When I'm in the trade, I'm using structures to manage. So I can look over here and I can see right here, I can isolate this and I can see the passive side is here. There's the icebergs. The buyers were working their hardest and the sellers took over. Where's the high volume? Let's think fractal together. This is too high. There's my break. There's my test. This is a short in TraderLab if you want, and then you'd be going for this, or you're using it for trade management. So let's see what happens here. Right here, I see my buyer. Now, right here, we got to stay below this to continue, and nobody knows. It's part of the joy. So right here, the short is over. Now, I knew when we came up here that we could pop the mid and then come back, right? That's a possibility. But I also know there's going to be stops above here and the mid. So I was out. So my last runner was looking for this and down. So that was a pretty nice trade. Of course, it didn't happen, but that doesn't matter. It happened enough because this was my primary target. This was sort of the bonus round. So when this happens, then everything changes here. And this is resistance, a higher time frame. Let's go take a look. And we blow right through it. So now I am perplexed and I'm out of alignment. So I do not have a long. I do not take a long. So because I got my overnight low, and statistically, the probability of getting the ETH high is not high. It exists, but it's not a high probability. Now, so I'm posting to TraderLab. There's a couple possibilities. One is to come out the top. This is the first hour's high. Has a probability, a good probability of taking it out. And then the target would be this. And this I had posted, and this again was on the chart I showed you this morning on the top of the stream. But this is the outside edge in a higher time frame, right there. So let's go take a look real quick, just so you see where these levels are coming from. That level that I'm showing you is there. So it's the outside edge of this. And I was looking, remember, for yesterday's low in this, which doesn't mean it won't happen, but that's not what's happening right now. So then I squeeze shorts in here, and these shorts, including me, out. And I didn't get to my next targets, which are here. Now, if this is actually too low, and we don't know, it might get tested, it may never get tested, then this is what's too high, okay? And that's 5872-ish. Now, let's come back to Bookmap. I want you to see the pieces. 5872-ish. So I posted into TraderLab. Possibility to take this out and go here, or, and here's the or, test that low volume edge, and low volume areas, we typically go through them, and then mean reversion. The mean is there and potentially here. But this is the mean. Let's go back one more time. The mean, around 60. Okay, so too high. I'm not paying that somewhere. Back to the mean. Let's watch. And I post this in TraderLab. So now, and the thing that's hard, of course, is if you're trading in multiple time frames, is not to get myopic. What I find, and that's a problem for all of us. So if if we get hung up on the microstructure, we may be planning for this trade to go here. I do the same, but I also understand I'm trading in multiple time frames or fractals, and that depending on what happens in here, and I do anticipate going through it. If I get a sell structure, it sets up a short, and the longs then are going to be trapped. So that was my trade, and this is posted. Now, let's look at the short. First of all, location, real estate. What do I see now? Now, this is more advanced in the sense you really have to kind of anticipate. Remember, I have a saying, you got to anticipate to participate. Nobody predicts anything. Maybe you do. Come to Trader Lab. I don't, because I can't. It's not about prediction. It's about maybe. The best you got in trading is maybe. So I come through here. Now, right here at 9:30, we have what's called the IB stat. And there's over a 90% probability we'll either take out the first hour's high or low. It was very difficult for me to take this trade because 9:30 is when this stat comes into play. And I'm looking at this and I'm going, oh, crumb. And actually, I had a different word, but I'm going to say for the stream, crumb. And because of the time. So let's look at the short. Now, I'm trading structure and statistics. I have a conflict here because I have over 90% probability at 9:30 Central Time or after, and it may still take it out later. And then I got this. What do I do? What do I do? And I'm going to tell you, my stomach starts flipping. I start worrying about my breakfast coming out. But let's look at what we see here. I see absorption. I see a stop sweep. I see a selling iceberg, There's my seller. Now I'm in the microstructure. I'm now down with the tweezer. Think electron microscope. This here is a consolidation. Too high, too low. Here, let me draw it a little better for you. This is trading in fractals. Advanced concepts that anybody can learn. Not going to be a 2-week experience. Trust me on this. This is going to take you time because instead of using indicators that are backwards looking and conflicted, I'm using participant behavior. What I've done is I put myself here. Now, I don't know what's going to happen here, but when I see this, do you notice a change in behavior right here? Where am I? I'm here, and I've got absorption, stop sweep, there's absorption, iceberg, break low. Now I have a suspect. This is too high. Let's watch the behavior. Test. Watch. There's your short. Now, did you get this? And where are we going? Here. This is called mean reversion. This is a short. Now, this is something you have to know what you're going to do. Let me take you a little further now back into this. I just want you to see it. Now, the thing about this is, when you see this, you might not take this trade. I took this one, and I just take it because I'm not smart enough to know what the market will do. I only know what it might do, and I know where it might do it. That's as deep as this is. Microstructure is there. That's why you get the test. And now I'm coming up here. My sellers are here. My sellers are here. My sellers are there. My sellers are, well, there. But this is my resistance. It's my micro volume. Now, as this is filling in, it's a bigger consolidation. Where's the volume? At the moment, because this only shows what's on here, it's right here. So this now is a fractal. Micro is here. And then as this expands, I'm getting my volume is filling here. This volume is below that little electron microscope volume. One more little thing. And this is how you learn, at least this, how to think in fractals or multiple time frames, if you want to use that term. I don't use time. It's not part of my process because the participants are not on the clock. We all start out with something, 5 minute, 2 minute, 1 minute, whatever the heck it is. So here's what I know. Microstructure, too high. There's my test. My sellers are here. I come back and test. Now this is my high volume. I got my sellers This is where it fails, or up here. Here, break. Now, you could either be shorting in here, stop over here. If you miss this, this is microstructure. You could actually sell this. Again, I'm in an advanced place here. Let me show you why. Now, remember what happened here. Chop, 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 break. So you chop, 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 break, test, break. You can see all the structure. Test, see it, short. So for me, and here's what sets this up, this, okay? Outside edge of a consolidation and intermediate time frame. So for me, the short is here, 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 stop. Now, we missed the whole thing, right? Watch. What is this? What's this right here? Chop, 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 chop. What do I got here? Sellers. Where's my sellers? Here, here. Where's my buyers? Right there. Do you want to get long, Lewis? No. Micro high volume structure. So right here, you could be taking a short, but your stop's got to be out here. Quite an avalanche. And this is called mean reversion. And there's the mean in the intermediate time frame. Now, when this is doing this, I'm also targeting this. This is an intermediate time frame, Vpac, volume point of control, retail price. In the developing daily time frame, this is the volume point of control. So I had this, this, and fall out the bottom. Notice where we come. So, and then I'm holding. Watch. Vpac migration right here. Now, here's another way to look at this. If this price is too high, it sets up, and that's a variable high volume node. I'm tracking the movement of the volume because the volume, at least in the way I work it, the volume's the truth of the market. It's not the indicator crossing over. I mean, are you getting long here? I'm not. I'm looking at this because my outside edge now is this distribution that we fell out of, and it's called the low volume node. It's around here. I'm going to just mark it because if we come back up in this area, it might be a short or not. It's called the low volume node. And what is a low volume node? It's the same thing as that, but this is an intermediate time frame low volume node, which was why we got short. And now in the developing daily time frame, I'm going down in time frame or fractal. This is the outside edge or low volume node. And the language, remember, this is language, is saying this retail price, we're not paying that, we're out of here. And then we come back to this retail price there. Oh, maybe too low. Well, let's come back outside. To where? Vpac migration. Two possibilities. Continue higher or break low. If I break low, I have a potential short back to here or not. So let's see what it does. Let me try to grab this and I'll come up and look at your questions. But this is a very active day and it's actually rotational trading. Where is this thing? About 55, I think. And I can't see your questions while I'm doing this. So I'm going to come up for oxygen here. So roughly this is like about here. So if this is too high, then the possibility is, don't forget resistance is here, is to come down here or not. So let's just track it. Now we come up here. We're back at our low volume node. Watch. Resistance is here. This is where the sellers took over. The buyers were here. I'm going to throw another little line on here for you. I come outside. Remember? What's too high? I'm not paying that. We don't know exactly. I mean, there's no precision in this. If there's stops sitting here, it creates momentum. So this is my resistance. This is my outside edge. Let's just see. Where do I come? here. Sets up another short in the Trader Lab back to here, and then maybe out the bottom, or who knows, part of the joy. There you go. So too low, retail in the intermediate. Here, possibly too high. Pull back here. Too low. Don't know. Come back up here. The LVN is out here. If we get through here, then it's back to the HVN. That's kind of how this works. So if this is where my sellers were, that's why this is exactly where they took over. Those sellers, the way I mentally kind of rationalize the behavior is that if a seller took over up here and the buyers come back, is that seller going to get activated again? And where am I again? I'm at the microcomposite low volume node. And here's where the sellers are. Here's my new developing microstructure, micro consolidation, this little inside of it. There's the volume. I'm going to put a little box around it just so you could see it a little more clearly, and you're going to see how trading in fractals might work. Not saying it's right for you. I'm not suggesting anybody do this. But I am going to suggest that if you know where the behavior might take place, not where it will take place, but why, you would be marking your chart up and you'd be looking at a short back here. It's called mean reversion. Watch. And where's the volume over here? Here. Back to here. This is called trading in fractals. It's called mean reversion trading. I'll now look at your questions. Thanks for your patience. And I want to show you that where that liquidity band was. You see it? So that's why this early on, I said we got to be conscious of this. That's where the market was the low of the day. Okay. Once again, there's that liquidity band. Questions, guys, and thanks for your patience. This is trading in fractals. This is Trader Lab. And I believe anybody can learn to trade. But you got to do the work. And the thing about trading is you're in an uncertain, random environment. There's nothing saying that taking a short here is going to do anything other than get you a stop. There's nothing, anything. That's it. This is our business. So what I know is, I know this is too high, and I know this is a potential short, and my stop would be here. So if I get short here or here, my stop is here. It's palatable. It's not enjoyable, but it's palatable. So I can still come here. This is the mean. Now, if I can't get below these buyers, then I can get squeezed out. And we do have a statistic, remember, over a 90% probability to take out either the first hour's high or low. The liquidity is still sitting in the book. That guy is still there. So it might be suggesting we're going to come out the top and eventually get here, because this is a target. So we have this and this if we come out the top. And then if we do come out the top, this would be the target. So you just have to take your trades. That's it. And you are going to take stops. And I know we're all allergic to stops, but I'll tell you, the casinos pay the gamblers, and they still do really well, right? So we have to think about what business we're in. We're not in the, I need to be right. We all want to make, successful trades. Yes. But it's not where you get your approval from the market. Your approval comes from following a vetted structured trade plan, no matter the outcome, because the dealers play the games in the casinos exactly the same way. If a dealer started changing the game because they don't want to pay the gamblers, that dealer would be fired. So why? Because the only way they extract their edge over a random distribution of outcomes is by playing the games with anchored inputs. I did a primer webinar on this, by the way. So you understand the business, because most of us think the business is indicators and time frames, and I'm going to suggest no, it's not. If you understand market mechanics, I think you can deploy indicators more productively. But if it's just spending your life trying to find the right mix, the right tweak and all that. That's what most retail traders do. And the fantasy is now you have an ATM in the basement, and I have to say no. My opinion again, my experience. I have a question here in Trader Lab. Seabass, thank you. The long-term chart. Oh, hold on. It wasn't Seabass. Elliot, is there a certain amount of days you use for the microcomposite time frame levels? It's not time-based, it's behavior. So this is the microcomposite. What I do is I look the distribution of the volume, and based on where, and the days have to overlap. So when we had these 2 days here, I had just a composite here because I was just looking in here. This is an inside day. When we broke out, I had nothing here. So it was out in space. So all I had was a composite across here. So we had a breakout of a consolidation, an inside day, and then opened and off we went. Breakout. Then what do? Gap and run. So there was no composites for me over this day and this day because there was no balance. It was out of balance. Then once yesterday came in and we went into the opposite and traversed this, now I extended the composite to cover these 2 days and this day. So I use the structure. Time is not an element in any of my trading. It is structure. Because structure shows us participant behavior. Having a fixed time like a week or anything, to me, and it's just the way I approach it, is not relevant. Because the idea of volume is where did it happen? Where did the participants transact? And what I'm trying to accomplish is I want to see where these transactions took place and where's the market relative to this? Well, this is too high. Where's the market relative to this, which is the highest volume in all of this from down here, which was a breakout, to up here? Now I want to see all of it. Now, if I want, I can break these apart, but because they're overlapping, that's why I'm using all the volume. I hope that answers your question. I'm getting a question. Seabass is asking me, was there a long when Vpac migrated and it came back to check the consolidation made at the microcom? Okay, let me see. Seabass is asking me if we actually got a long setup our trade. I think, are you referring to this? What time would that be? Seabass, what time are you referring to when the Vpac migrated and to check the consolidation made here? So the consolidation down here, I think you're talking about this. So this was the microcomposite Vpac, which is mean reversion. It's a mean and an intermediate time frame. We got Vpac migration. We broke outside. We tested. It could be a long. Because it's mean reversion. The mean is here. So the coming down to here in a higher time frame is called mean reversion. That's the mean in the intermediate time frame. In the developing time frame, the volume point of control shifts higher. I break below it, it sets up, and this is resistance, a rotation down to who knows where. I do know this is support, but I don't know anything else. When right here, if I come across this, then it's two things are possible. Here to here, or here, and then you're holding for a stat here. I think it's really a troubled trade. Was it a long? If it's in your plan, it's a long. For me, it's not a long. It's a what's going on. So for me, I'm conflicted in this. So for me, now I didn't take this because I'm streaming, but I'm looking over here. And then that sets up this to here. But I also know I have now, what was this? Low volume node. What's this out here? low volume node. Let's mark these. And what a low volume node is, remember, is outside edges of consolidations. Now, this is what's confusing for all of us, because when you're trading in a quote multiple time frame, one person's long over here where they just put their helmet on with a stop here, get risk neutral, and then ride it out looking for the stat here and up above. It's all subject to time frame. Or you're taking a short out here back to here and out. It's all a matter of trade plan. So is this a viable long? I think what sets up the long aspect of this is the resting liquidity has not gone anywhere, which was our obstacle to get lower. Coming back here, which is a mean reversion in an intermediate time frame. This is the mean or median. That's the highest volume. The market is attracted to volume. Here, we test the microstructure in alignment with the microcomposite volume point of control. So the answer to the question, yes, potential long mean reversion to here, and then resistance is here and potentially back here. So you're in rotation and you're basically playing a statistic that you're going to come out here and go there because that's our targeting. And now, guys, if you don't have a trade plan for this, you don't have to do any of this. Notice where we come. We came right back here. And what happened here? The buyers were here. We tested them here. Came up. Mean reverted back. Got buyers here. I got buyers there. Microstructure. And I got buyers here. It's a tough trade, I think. And we come back out here. Outside edge. Out here. Potential to rotate. And we didn't get back here. That supports potentially coming out the top. So, yes, to answer your question, yeah, you're welcome. As far as how to draw these microcomposites, I do not. What I do is I look at the information I want to get out of it. That's ultimately how I draw these things. I also will draw composites inside of composites, and I can't show you here, but if I only wanted to see what happened between these two bars, I could just draw a composite here, but because these overlapped, I might just draw this and ignore this. It's not going to really show me much different. It's going to show me still high volume will be there, and I'll still have low volume here. So it's not going to change what I need to see. So to answer the question, what's the right way to do it? If you just pull information in indiscriminately, it's not going to mean anything. You want to pull in the information that is important to you. So the answer to the question, what's the right way to do it, is what do you want to see? That's kind of the real answer, because there's no fixed way to do any of this. A lot of this has to do with the time frame or fractal you want to trade in. So if you're trading into an intermediate location, it's back to there. That's mean reversion, right? There. Doesn't get any better than that. There's no precision. Out here, you're testing this. If it's too low, you come up here. You cross the Vpac, mean reversion. Now you come back here. This is mean reversion. You come up here. This is mean reversion. You come out here. This is the mean reversion. In the fractal, this is the mean. That mean reversion. So when I come back here and bounce off it, it's the same as coming back here and bouncing off it. If I come below, but I'm above this, then it's still potentially a long back to here, back to the mean. Out here, potentially back to the mean. If I don't get back to the mean, then I can come out the top. So it's not an easy day to trade because there's conflict in here. And this is difficult for me. It's difficult for a lot of traders. So the thing is, before you trade, you know what you will do. You have to know these levels, and they're on your chart. That's why the short was out here, back to here, and then maybe out the bottom. Didn't do it, then this is support. The same thing in a fractal is what's happening here, back to here, back to here. It's the same trade. And we're looking for coming out the top now. And this. Any questions now? How we doing in YouTube, guys? And guys, if you're in YouTube and you're just losing your mind with this, I understand. We're thinking or operating in multiple time frames. So you can be short in one time frame and looking for long in an intermediate time frame. That scrambles us. This is the outside edge. This is too low. And this is your fractal. So in the microstructure, in alignment with this, don't forget, I have my buyers here. Notice the buyers here. You think there's a little urgency? Where was my high volume? It's there. Where's the top of my consolidation? Let's see if this makes any sense. Here. So my volume is here, right in there, right there. Okay. And my outside edge of the consolidation is here. So in actuality, if you want to think about this, it's a breakout and then a test. Too low, absorption, sell stops coming out, iceberg absorption, potential long, your stop's got to be under here. I don't know if you can do that, but that's up to you. And then mean reversion coming across this and then back to here is reversion trading. So this is a long. So, and don't forget, we have over 90% probability of taking out the first hour's high or low. If we can clear this again, and of course clear this, then our target, all of this is on the chart before the fact, is this. And it is abusive when it's rotational, just so you know. Nobody likes that. Now, we have another trade here, and it's not a recommendation. It's been very two-sided here. If this is our target, we have a couple of trades, and none of these are recommendations. We have something called the IB continuation trade, and we have this might be a short or not, and we have the IBF, which is to come out, and if we see exhaustion, to again go back into mean reversion in this time frame, which might take us back here, and then maybe down, wherever, to this outside edge. So two possibilities. Neither of these are trade recommendations. You can take stops going long or short anytime, anywhere. Let me see. How are we doing in YouTube, guys? Please give a thumb up, a like, very helpful. Also, if you want to visit the Trader Lab, there is no cost. There's a link in the bottom of YouTube. You can download 60 PDFs of these structured trades that I'm sharing. This is not a 2-week event and now you're a trader. Let's get serious. Let's get real. If that's FOMO. That's that urgency, and that's all dopamine and a lot of other things. If you're interested in the business of trading, I really think you have to kind of change your thinking and get realistic on what it takes to be a high-level competitor. If you're going to play on a professional sports team, you don't throw a couple hoops, a few baskets, and now you go play with the Bulls. Not happening. And if you want to be in this business, you got to be the best you can be. And to become the best you can be, you've got to invest in education that's credible, and you have to work it. You have to set goals. You have to build process, and you need statistics. The thing that ultimately, in my opinion, gives you the ability to sustain yourself through the losses, and the losses are overhead and cost of production. What gives you that ability is knowing that you have a positive expectancy anytime you put a trade on. Casinos pay the gamblers. There's overhead and cost of production in all businesses. The reason the casinos will let a gambler walk out or pay a gambler, and I always like to use $100,000 in cash in a suitcase, and then the next hand is played exactly the same way. Why? because over a large sample size of random outcomes, they extract the dollars from the gamblers. Not every gambler. Some gamblers walk out with the cash, but over time, they're building bigger casinos, give you the cocktails, maybe the ticket to the buffet, and if you leave enough dollars with them, they may fly you in, comp your hotel, and give you tickets to Adele. Why? How can they do that? Same reason we can do it, by treating this business for what it is, gaming, probabilities, and then having the discipline to actually follow a plan that has a statistical edge. You know, the emotional triggers that we get, fight, flight, bailout, skip the next trade, and all that, raise your hand if you've done that and you are still doing it. It happens because the intellect, the conscious mind, is layered on top of a primal reptilian brain, if you will. We survived and developed as a species because we didn't get picked off too much. And because of, let's just call it natural selection, those who got picked off did not get to breed. Those who kind of figured out the saber-toothed tiger go the other way survived and developed. And eventually that brain evolved and developed. Let's just accept that. Maybe it's not, but let's just say maybe that's what's going on. Well, underneath the conscious mind is this reptilian mind that runs from fear, survival. Right, and it works great. Works really good in the outside world. In this world, we're in continual uncertainty, so we're triggered emotionally. What's behind the rock? Is the tiger behind the rock or a bear? I better be careful. So we're triggered with fear. So we don't do what we are supposed to do because of our fear triggers. And then our fear causes us, if we take a stop on the last trade, we don't take the next one. But the casinos deal the next hand, even if they pay the gamblers. We don't. We move our stop to break even based on what happened last time, when that's not in our plan. Because why? Well, I don't want to lose. What does that mean? I don't want to get bit by the saber-toothed tiger. So how do you get control, or at least better control? It's by understanding the dopamine fix, the FOMO, the fight and flight. And now what do you do with that? It's part of us. If it's part of us, we can't get rid of it. I tried for years. And then what I had to do was instead create tangibility. In other words, statistics. I'd open my trade plan. This is what I do today. And then I have my structured trades. And I know it has an X% probability of getting risk neutral, and then a % probability of getting to whatever the target is for that specific trade. And I'd take a stop, or I get a scale, take a stop, or I get a scale, get to a target, or have a trade management process. All of them are statistically vetted. So when I'm feeling fear and uncertainty, which is the only thing you can feel, remember I'm using the term feel, is because we are wired. We are in a 100% uncertain environment. How can you not be fearful and uncertain in an uncertain environment? Yet we have to still do something that's against our nature, which is to look behind the rock for the saber-toothed tiger, not go the other way, right? So the statistics give you the confidence to accept the random outcome because over a large sample size of random interactions that you have an edge. Not the next trade, maybe not the next 5, but over a large sample size, you extract the dollars from the other participants. Works for the casinos, and it can work for you if you do the work, and then you can build in the discipline and the tangible metrics. When you have something tangible, you can then get better control over the intangible, which is the chemicals that are released in your brain, because you can't control that. So remember, we're looking for this. Now, there's other ways into these trades, by the way. These are more advanced. I'm not going to really go into them, but there are other ways in. Low volume node is here. This is too low. We couldn't get back to here, so too low. Break high into the resistance. Break back here. Where's my low volume node? It's there. If this is too low, where am I going? Potentially out the top. What's at the top? Buy stops. So if I get long, and this is again advanced, trading in fractals, because why? Too low, too low. Come outside, low volume node, out here, too high. Can't get back here. Rotate outside of this distribution, get above this, up here, pull back, potential long here, microstructure to come out the top, get the buy stops over the high of the day. Remember, high probability, and then this is the target, not a recommendation. Anything can happen. But can you see? If I'm leaning on this for a short because it's resistance, I'm not paying that. And we're going to come back to retail, and I don't. What does that suggest? Too low? And now I'm up in this upper distribution. If I come out, where's too low? There. That's a long advanced. So I don't call trades. I'm as clueless as everybody else. Not ignorant, clueless. What does clueless mean in my interpretation? Random. Out the top, and then 85. Not a recommendation. And then, let's see, what do we got up here? Well, I think this is a bit of a reach, but this might take us up. There's another layer in here of resistance also. So primary targeting is this. And there is no value area yesterday. So that's pretty much it. Questions? How we doing in YouTube? Please give that thumb up. And remember, this stream will be available. Oh, Denise Scholl, yeah, she's been around forever. I mean, she's got to be kind of aged at the moment. Yep. Kiloton is mentioning a book, Market Mind Games by Denise Scholl. There's also a great book called The Best Loser Wins. And that's Tom Hogard. That's an excellent book. I recommend that one too. And there's also Brett Steinberger. He's excellent. And of course, we all know about Trading in the Zone. No, that's been around for a while. So there's a lot of books on psychology. The way to master psychology is statistics because it's tangible. When you don't have tangible, you have emotional, because that's it. And if the bus is being driven by your emotions, that's problematic for traders. We really have to manage our emotions. And the only way I found for me operating in uncertainty is to have a setup that has been vetted, so I know it has an edge, and then I have a statistic. So when I'm looking at the setup, I know, well, I've got 65, I'm making a number up, 65% probability of getting risk neutral before taking a full stop. I have an edge. I can take this trade, even though I will take full stops. If I get my scale, now I'm risk neutral. Then what's the probability of scratching the trade versus going on to the target? What about this target? By the way, what's my probability of getting here? Past performance not indicative of future results. Let me try to give you a number on this. And this is the way we opened it. A little, I would suggest it's probably in the 60%, 65 percentile that we get here. Could be a little higher or a little lower. And over 90% that we take this thing out. And let me find that. 97% probability-ish that we take out either the first hour's high or low. I'm leaning to this because of this band of liquidity that stopped us from taking out yesterday's low. Now, I'm going to tell you why I was going for yesterday's low. And also understanding that this was a problem, which I posted in TraderLab this morning. That if we could get, now, because we don't know if they're going to pull or, what are they going to do. So there is also about an 80% probability of taking out the previous high or low. So That's why I was going for this. I just want you to know statistics play a part. Well, if I can't get under here, unless we come back later in the day, and we might, remember, everything is maybe, then I've got this, and getting through yesterday's high, I'm going to say, I don't know. So I have no clue, right? So I kind of go for this because this to me is more achievable. And it was the highest volume from yesterday. Now, what is this? The highest volume in the fractal. This, in a higher time frame, that test is the same as coming back here in the RTH time frame from yesterday. These are the same, except this is intermediate time frame and this is yesterday's RTH, going down in time frame as you think of it. And over a 90%, 97% probability to take out the first hour's high or low, and an 85-ish% probability to take out yesterday's high or low. Now, I'm not too concerned about yesterday's high and low. We could easily have an inside day. So, right? So that's why this, and we'll see. And it's also possible that we just come out here, exhaust, and come back here. So I know that in my trade plan. Since I can't predict anything, I just know maybe. Maybe it'll do this, maybe it'll do that, maybe it'll come up here, maybe it'll just pop the stops here, mean revert, come back here. Maybe. And that's all I have, because that's all you got in trading is maybe. Make a note of that too. You're in an environment that's completely uncertain. Part of the way to think, I think, in trading is where's the fuel? The fuel is the stops. Where's the opening swing high? It's here. Where's the stops? It's above here. So I'm looking for this to get taken out. It doesn't have exactly, look at this. The sellers are here. So this is a real tenuous environment for me. But if I was going to take a long, I have a structured long here, and I got a scale, ahead of what? What was this? Let's come back. Too high. That's how I work it. So if I get long here, I got a scale against my resistance. Then I'm looking for a 90% probability here and about a 70 or 67% probability there. And if I just pop here and fall back in, then I got this. So I got those two trades sitting here. My last long is this, or I have nothing if it's not in my plan. Does this make sense? See, money, I don't assume, but I would suspect the normal variation day, unless we fall back inside and it just, I don't think, I don't like to use the word I don't think, because that's like predicting. And I stay in a very fluid mindset of not predicting, because predicting gets me myopic. So I don't predict. I think only maybe is as far as I go with what my anticipation is. It's maybe for me. So yeah, if we extend out, then I got this. If I can't get out, I can still mean revert. This is a nasty trade, because you could be getting long here. You got a scale here, and you're playing. The play is to take the buy stops out above here. Well, I still got my sellers right there. I can't know it. I only know this is support, that is resistance. And the support's based on that, this outside edge. So I could come under here, pop this, and come up. This is really where everything fails, is here. But if I'm in this trade, I can't afford, if you will, because of the range, not to have, my stop should be like maybe here or here. And I think the possibility of getting taken out of this trade is pretty high. Then it's just a scratch. That's it. LVN, outside edge, sellers were absorbed, microstructure. Let's look at it. I mean, this is scalpel. is right there. So LVN is here. So this is the outside edge of the distribution. You had your buyers here. Buyers are there. Buyers are there. Support is here. Buyers were there. Sellers took a shot here. No bueno. Buyers, buyers. Sellers are here. That's why this is resistance. Sellers are here. Buyers are here. That's about it. So I can slice this down. Now this is support. Also, this is a consolidation. Break high. It's the same thing. It's a breakout. Now, if I go into microstructure, that's where it is. I'm basing it on this. I know I got a lot of lines laying around here. Let me get rid of some of these. And you kind of see it a little clearer. Now, when I'm doing this and actually trading, I'm drawing these lines for you to see them. I just look at this and I see this. I look at this, I see it. It's language. So instead of just seeing this, I see the chop, and this is an auction. This is, too high, too low. But what happened over here? Buyers. What happened here? Sellers. The buyers got above the sellers. So this is support. Then here, what's this? Check support. Can put one over here. And you can see it if you look to the right. So I have this support. I have this support. Break here, resistance, support, resistance. If I can get across this and this, then I squeeze and I'm off to my, wherever. But this is very weak so far. So if I come out here, I have two trades to consider. And this is where your teeth chatter, because either one can work. Now, statistically, this is where I want to go. And we're starting to come out. But if I come out, I have to be conscious of potential to come back here. So I've got two trades, but my primary trade is to get here. So, and you don't have to trade both of them. You pick, your side and you put your helmet on. So now we want to watch the behavior with the sellers up here. What happens here with these guys? So these are buy stops. We're over the high, the IB high. We just fulfilled our statistic, and I'm running out of time. I got 7 minutes. If you got final questions, please put them in. So there's absorption, selling iceberg. There's the absorption. Now we want to watch very carefully here. And this is not a trade recommendation. What I suspect is, because I know what the possibilities are. The possibilities are we break here, we pull back to some of this high volume, or even out here. And if we hold the support levels, we continue higher. If I break here and I get no traction above here, it sets up these longs getting taken out. So it could be a mean reversion trade. I'm inclined to go north, okay? So I'm not going to try to trade both sides of this. I would kind of pick a side and just kind of go down with the ship. So if I take my long, wherever I take it, right, wherever my location is, I've got to scale. Remember, here, support is here, support is there, absorption is here. I can fall right back inside, and that's okay because that's just one trade, but I'm risk neutral. Now it's trade management. Where would I put my stop? You have to vet this. It would be under here. And then I'm just sitting. And the worst that's going to happen to me, because I trade, or at least in the trader lab, a minimum 2-lot configuration, is to be risk neutral, take a stop and scratch. Broker sends you a gift basket. Thanks for sending the kids to camp or on vacation. Final questions. And remember, there's a link in the bottom of YouTube. If you're interested, you can visit the Bookmap Discord Trader Lab community, become part of the community. It's about the business of trading. It's a serious community. It's very serious. and it's about traders helping traders to get better, leveraging our collective experience. If you've been doing this for a while, you got experience. The thing is, that experience, in my opinion, is also trapped equity. You pay for that experience in time and maybe equity. And yet, many of us, at least I did early on in my development, kept doing the same process, thinking it was just tuning and tweaking because of random success. Everybody has winning trades. I mean, that's not a problem. The problem is having consistency and obviously only trading where you have an edge that over time you get more dollars out of the other side than you give them. So we think we're on the right path because we have winners. I'm going to suggest, imagine if you just turn your monitors off and you just push buy or sell. You're going to have winners too. So does that make that a process that creates sustainability and potentially a career path? I'm going to say it again, my opinion, no. Didn't for me. So I had to learn about this stuff and think about it differently. I had to think about where's a successful business model? It's gaming. Once I understood the business model that's proven, I'm not reinventing the wheel. I'm transposing uncertainty, which is what the casinos have, uncertainty into a statistically based business, which is what the casinos have. It works for them. Might that approach as a business model using processes that you can learn in the Trader Lab, might that help you? The question. You have to come up with the answer. Please give a thumb up. Remember, this is our target, not a recommendation. And this is the over 90% probability. This is about a 67, 70%-ish probability. I'm just pulling those statistics out of my head, but we have them in the Trader Lab, and that's all available at no cost, as well as a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow, icebergs. What about all those? Swing trading, options. I think I said market maker behavior. There's a lot. Algorithmic behavior. I mean, so much. And it's all available at no cost. And in fact, if you go to bookmap.com to the subscription page, there's a free, no-cost digital version of Bookmap you can get your hands on. And it has data, and you can play with it. It's a stripped down version, but the fact is you can kind of get a sense of what this is about. Order flow, delta, and you'll see a lot of different behaviors in there. I'll give you a little sense for why this tool is so important. I don't use indicators, so I'm dependent on order flow to see what's going on in here. And if I could read it, which is what I'm doing in microstructure, I can then put that together in multiple time frames in order to have an opportunity to participate. Hope you got something out of this today, guys. Remember, when you come to Trader Lab, there is no cost. There's also 60 PDFs of these trades that I've been sharing with you. I did these almost 5 years ago. I'm not a vendor. There's no course. It is the leverage of the community. And there's a lot here, Anyway, you can download those. There's descriptions. And a lot of these are the same trades that I'm sharing with you today. So, order flow phenomena, bracketing. This is live trades I took and also screenshots. Traders were asking me, what are you doing? And I was like, okay, here's some ideas. You can come to Trader Lab. There's a lot of support there, not to mention all the education that's available at no cost. You use the link in the bottom of YouTube. And these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and use our library of webinars. And you can all visit the Trader Lab. Thanks, guys, for visiting. Please give a thumb up, a like. It supports the stream. If you're in Trader Lab, guys, review this stream, make it part of your library, and let's all get better together. Thanks, guys. Have a great day, and I'll see you in the Trader Lab.